The general perception is that Pakistan is a country distrustful of digital payments and obsessively attached to dealing in cash. The reality is different. Data from the State Bank of Pakistan is unambiguous on this point. Internet-based payments volume during the period from 2016 to 2020 went up by an annualized average of 70.1% per year. And when we say internet-based transactions, we mean bank websites, bank and payment provider mobile apps, and credit and debit card transactions on e-commerce websites, all excluding cash-on-delivery transactions. Farooq Tirmizi takes a look at how Pakistan is screaming to be able to transact online and how the formal financial system makes it difficult to use formal non-cash payment methods. There are two things immediately obvious at first glance. The first is that the paper-based system of checks, deposit slips, traveler's checks is dying. It is the only part of the payment system to witness negative growth, declining by an average of about 0.8% per year during the 4 years between 2016 and 2020. The second is that the only parts of the system that are growing at an appreciable above the rate of inflation are, in order of growth rate, mobile app-based payments, 142% per year average annual growth rate between 2016 and 2020, card-based e-commerce at 55%, desktop browser-based internet banking at 50.2%, and online B2B transfers at 50%. And while ATM transactions as well as point-of-sale transactions have also grown, they have only done so marginally. What all this tells us is that wherever Pakistanis have unfettered access to the ability to pay through an online system, they are using it with gusto, and they are actively decreasing the use of non-cash-based formal money such as checks. There are significant implications of the data we have just presented. Firstly, the non-internet-based side of the banking system's payment infrastructure is quite literally too slow to accommodate the pace of transactions the economy is demanding. And while cash remains the most popular mode of transactions, it appears people do not actually prefer it. They are just used to it. So why is the system still so sclerotic? What are the most convenient modes of payment still less than 2% of total transactions? It is easy to blame the banks for this, and there's certainly a lot of room for improvement on the part of the banks. But the hard truth is this: the Zardari administration's delays in launching 3G and 4G internet by over 5 years are coming to bite the economy. Most Pakistanis who currently have the internet have it because of their mobile broadband internet connection, which was only made possible after the 3G and 4G spectrum auctions in 2014 and 2016 respectively. By contrast, India auctioned both in 2010, so the banks had very little incentive to invest in internet-based payment systems early. Secondly, the banks in any country will not do anything until the regulator makes them do it. In other countries, the central banks often mandate more openness as a means of ensuring that individuals and businesses can conveniently transact. The banks, for their part, appear to have noticed. One after the other, the banks have started announcing that their account holders will be able to use their debit cards over the internet without having to first call their customer services helpline to enable their cards for online transactions before each transaction. Having said that, a lot is still missing in the existing system, and the lack of those things explains why card-based e-commerce is growing slower than, for instance, mobile banking. The State Bank is well aware of these limitations and of the necessity of it playing a role in building a better payments infrastructure in Pakistan. This is why the State Bank of Pakistan decided to build its own system called RAS. RAS is a simple tool that will allow for not just real-time settlement but for complex transactions and tracking. For instance, it will allow for automatically letting a recipient know not just that they have received a payment, but they have received it from, say, Mr. Siddiqui, who is paying the school fees for their son at Beacon House Margala campus. It will allow for specificity in what the transaction is for to a degree that is not possible under the current one-link system. Of course, there are some serious issues with RAS for now, such as the State Bank of Pakistan only allowing one feature on it for now. However, these are all temporary hurdles. Of course, both of these are temporary hurdles. The State Bank will make RAS more available to fintech players and it will enable more types of transactions over the next 2 years. The growing presence of fintech startups is also deeply encouraging. Regardless of whether one startup succeeds or many of them do, one thing is clear: the Pakistani consumer and the Pakistani businesses are likely to be able to find it significantly easier to do business online, which is especially welcome at a time when more and more of us are becoming comfortable using the internet for commercial transactions and would like the convenience of having our payments being online as well. For all the talk of Pakistanis being old-fashioned and cash-obsessed, the data suggests the opposite. They are hungry for technological change. If only the industry can keep pace.